Hello guys, it's Max here from Daily Market Movements and welcome to another episode where today we're going to be analysing the gold charts. Just before I start today's video, for those who are still interested in joining my signal service, please head over to my website dailymarketmovements.com. I charge a very small fee of $29.99 as a joining fee, and I've left a link to this website in the description of today's video. But let's start off with the gold markets. Gold actually finished the week rather strongly, up around 1945.80, so it was a pretty good close for the gold markets. Now, one thing that I will say for the gold chart at this moment in time is that there is a lot of negativity with regards to the fundamentals, and I don't think gold has really priced it in. You know, throughout the past week, at least, we've had so much hawkishness from the Fed, but that's just not really been priced into the gold chart. So at one point, gold will have to realize how hawkish the Fed is starting to become. As well as that, we've had the rising 10-year yields, for 2-year yields, for example. So pretty much even the 3-year and the 30-year yields, they've all been rising significantly. I think we've got the 10-year yield that briefly touched 2.7%, and gold just hasn't really priced that in. Of course, we had that horrible news from Russia and Ukraine about that bomb attack on the train station, which has killed about 30 people and injured about 100. And of course, that train station was used to take civilians out of Ukraine into Poland, or to at least the Polish border. So I think gold has spiked on that. But you know, as I just mentioned, with regards to the Fed, gold hasn't really reacted in the way that many traders thought that it would do, but at one point it will have to. So you know, medium to longer term, I'm quite bearish here on gold, especially with how hawkish the Fed is being, especially trimming the balance sheet, etc. That being said, we still find ourselves trading within this triangle pattern here. We found some nice support along the bottom of this trend line, and it's quite nice actually, because we are supported by the 50-day EMA. So even if we briefly break below this trend line, we've got that 50-day EMA, which is in a nice sloping upwards pattern. And as you know, I think it was back on the 29th of March, we did actually break below that uptrend, but we found support here at the 50-day EMA. So we're currently trading within this wedge. You could even argue that we could even draw here a small pattern within a pattern, and you know, we've got a nice little supportive area there. If I just take it down that tone, there we go. So if I just zoom in a little bit there, we've kind of got this resistance area here in the gold chart, and if we can break above here, and of course we close towards the high end of this resistance area going into the close, which should be it should be seen as a positive sign. But if we can break above there, then I think that opens up the doors towards 1960. I think we will be rather tamed here at 1960. I don't see us breaking above due to how hawkish the Fed has been in the recent couple of days. And if we do get rejected here, then we could potentially see a move back down towards at least 1930. Or even down to 1923 technically. But one thing that's for certain is that eventually this gold chart has to break out, whether that be towards the upside or the downside. Your guess is as good as mine, but I do know one thing: when this chart does break out, there will be a fantastic money making opportunity, and I will be sure to get involved.